Welcome to our weekend market analysis. This analysis is for the weekend of January 17th, 2026. I hope everyone is doing well. Well, I got a lot to cover, so I hope you stay with me. We got a short week coming up in the United States is Martin Luther King Day on Monday, so no trading cash markets on Monday, so we'll have a 4 days. Also, last week we had our inflation numbers, including October, our CPI and PPI numbers. And this coming week, we actually have the Fed's favorite inflation gauge is the PCE numbers, the personal consumption expenditure. Also, we will look at in our trade of the week, we look at our CPI trade, which is one of our strategies. Um, Also, in last week, every time we look at the sectors, we will digest what happened with the staples, the consumer defensive. They had a very good week. And then look at the components in the trade of the week. Also, our earnings season started, the big season started last week with our big banks, and we'll review that. But we also compare the bank's performance with the regional banks. The big banks uh, uh, did report there was a lot of actually profit taking, and also some of these banks were down significantly. But on the other hand, actually, regional banks did pretty well. Also, this coming week, we got heavy hitters coming up. So, again, the earnings season has kicked off. So, let's get ready for some excitement. We'll have Netflix, Intel. We got quite a few, again, some banks. So, let's get ready for that. Just for some of you who actually follow the volatility, remember the VIX. We have Friday for indexes, but the VIX expiration is on Wednesday. Monthly expiration is coming on Wednesday, and what we want to look at is also the volatility of VIX. So be aware Wednesday could be a little volatile day. The last but not least, I like to look at Bitcoin, which is in a kind of a crucial point. I've been analyzing for the last 6 weeks or so, talking about there's something called the Bitcoin winter, which is the usually in December to like the third week of December. It usually goes down and comes back up, and but we want to look at Bitcoin and also the Russell, which had been strong from the Fibonacci point of view, especially on monthly. So I hope you stay tuned for that. Um, as always, I like to look at on Saturdays what is happening with our cryptocurrencies, so you can see um, the volume, for instance, and the market cap. We had 1.68 billion in the 24 hours in Bitcoin was now it's up to 95,000, 1.9 trillion market cap, and then Ethereum is right after. So let's look at what we had last week. We had our core CPI for actually October and the CPI month over month. And I'm sorry, this is for last month. The core CPI came actually better than expected. The CPI was in line, the CPI year over year, but it was a core PPI for October and the PPI. And then for last month, what we had was better than expected again. And the retail sales also did well. So let's dive in a little more on the CPI. As I mentioned, it came at 0.3% for December, and it is in November, we had that 0.2%. So we are 2.7%. It's still not at the 2% target of Fed, but we're getting a little closer. Now, one thing was the major component of this monthly inflation, which has been a sticky point for the last 5 years, really, is the shelter. It was up 0.4%, which is really 0.14% of the overall gain. The food actually index increased 0.7%, and this includes at home and also eating away. So generally, which that was up 0.7% for the month. The energy was up 0.3%, and natural gas prices were up 4.4. On the other hand, the gasoline declined 0.5%, and the electricity dropped 0.1%. So energy prices are up 2.3% year over year. Now, the core CPI, which excludes the volatile food and energy prices, was up 0.2% for December and is up 2.6% on an annual basis. So, which is again, we're getting close to that 2%, but not there yet. And it's been kind of sticky in that this area for a while. Now, as far as for the annual increases, now the biggest culprits for the increases are furnishing and operations. They're up 4%, medical care 3.2%, shelter 3.2%, recreation 3%, and personal care 3.7%. As I mentioned, the big economic news this coming week is our uh, the core PCE, the price index coming on Thursday, and that's for October data. So we want to be aware of that. And then we want to also watch the Bank of Japan policy rate, monetary policy statement, and their outlook. So that's also, I think, very important. The yields, as you can see, we have been converging for a past month or so. What is happening is um, this month we were ahead, and now we are really in line what it was about a month ago. We had a nice drop in UK gilt, the bonds, 10-year bonds in the United Kingdom. In the United States, we see a little increase. And remember, the FOMC will be coming soon also with their decision. So, what kind of a week it was? Well, the Dow was kind of flat. It was down 0.29%. Nasdaq Technology was down 0.66%. So you can see the rotation as we will look. And then S&P was right in the middle, approximately closer to Dow, down 0.38%. Gold continues being up 1.65%. Copper was down a little less than 1%, and crude oil was up 1%. So for the year to date, we see that Dow is down 0.47% from its this year's high. S&P is down 0.53% from January 12th high. We had an all-time high. And NASDAQ, again, on January 12th, we hit all-time highs on all of them, down 0.92%. Actually, NASDAQ, we haven't hit the all-time high, but what we have is basically from the years. And then, so for the year, for the week, the markets were down 0.2%. But what we notice is the large cap growth was down 1.5%, while the U.S. mid cap growth was actually up almost 2%. And you see the move to the US small caps, 1.4%. We see the value was actually up 1.49%. So we see there's some rotation going on. As far as what we look at the indices, again, they are, or what we see, the Dow is above its 20 and 50. We see S&P above 20 and 50. We see NASDAQ is, consolidating. Look at this, has been moving, but it is still touched its 20-day moving average, still above. But look at this Russell. After hitting its 50-day moving average, even you compare to NASDAQ, you see this nice move up and hit that all-time high. And then Wilshire 5000 also above its 20 and 50. And look at what happened to the yield, especially on Friday, way above its 20-day moving average. The dollar, consequently, is all above its 20 and 50-day moving average. The commodities, after a nice move, they have retraced. The same thing with the crude oil. But the dollar, the gold, as you see, has been hitting all-time highs, and a little consolidation for past few days. And also VIX, after being really down at close to 14, we came back, hit the 50-day moving average, and now we are right above 20-day moving average. When I look at our sectors, what we see is this is based on relative strength, RSI, relative strength index. You see the strongest one for past 2 months is the industrial, a nice move from its 20-day and 50-day moving average. Also, the real estate, the REITs have had a big move. the same, look at this defense and the staples, the consumer defensive, huge move. We will talk about this. We will look at in the stocks in the trade of the week. You see the components, a lot of big components. The money has really rotated to this, and we'll see when you look at technology, look at the technology has been just consolidating flat moving averages. And here we are in the staples. Also, we see basic material thanks to the precious metal and mining, and that they have had a big move. We see energy had a nice jump, S&P that we talked about. On the other hand, the utility had a nice move, went above its 50, came back, and we're just right around this 50-day moving average. Discretionary is sitting right on the 20-day, but as I mentioned, technology is consolidating. Healthcare, after it's a nice move up 50-day moving average, which is right around this 20-day. And financials with their earnings, the big banks coming up, the few of them had come up with their earnings from Wells Fargo, JP Morgan. We had Citigroup. They retraced, they went to their 50-day moving average. We just bounced off that. Last but not least is the communications, and what we see is right on its 50-day moving average under its 20-day. Globally, again, we see South Korea continues their strength. We see Belgium, we see Mexico and Austria. So they have been the strong ones. On the weaker side, we still see India, we see China, and we see France just broke below its 20-day moving average, and Singapore. As far as the sentiment goes, we see there was a really positive sentiment now in past Wednesday. Um, we see the bulls went to 49.5, which is way above the 37.5 average. But the bears are still pretty close to the average of 31%. So the negative sentiment didn't move much. It was mostly people who were neutral or hold. They moved to the bull campaign. And the same thing we see in CNN Fear and Greed. We have moved to the moderate greed at 62. As far as the technical side, now we keep moving. The moving averages are, the stocks above their moving averages are at 65.7%. So again, what we see, but going back all the way, like in November, end of October, we have really been consolidating, right? This area, we have hit, I've mentioned about Magic 7,000. We did hit that. We've been just working right around that number, trying to find the direction. One thing we know is that 50-day moving average has been a nice support since end of November. And now the 21-day and 8-day, that 8-day has been a good support. So we are right around that. We are holding that support. And then once we go down, once we hit that 21-day, if you hold it, then that will give us the direction. Otherwise, we will go to that 50 days. We had a nice volume on Friday. As far as the Bollinger Bands goes, you see we are contracting, but we're still above 18-day, although we went out of uh, embeddedness, we went overbought, and when now is the moment is still positive, but we have shaken off the overbought. MACD just crossed to negative, but we're still pretty flat. So we need this week to see some direction. The same thing goes to NASDAQ. Again, we see contraction, um, and we are right around hugging that 18-day moving average, although momentum, we shook off the overbought. The momentum still above the 50, but the direction is going down, and MACD is pretty flat. As far as the Russell goes, look at the strength. Opposite of the Bollinger Bands contracting here, we are expanding. We are way above 18-day, but Bollinger Bands are expanding with the price. So it is telling us the strength will continue. We see that we are embedded. MACD is nicely positive. And when we look at weekly, we had a little overbought right now, but if we have another week, We will get embedded. So we have overbought on a weekly basis. Right now, we have gone outside the Bollinger Band, although MACD just became more positive. I want to also look at the Fibonacci extension we did. Goes back to 2020, and we hit the highs of 2021 in October, and we came back to low of 223. And we see right now we are in a crucial point on the 61.8, which is about 2,700, and we are very close to that. So what we see is basically we need to pay attention to this area so we can break it. But we've had a very strong move from our lows of 1760 50 area. And the Dow nicely is staying above its 18-day moving average. We went to a little bit of overbought, so we want to be aware of that as MACD is trying to cross, but we're still above 18-day moving average. As far as the weekly goes, we are embedded. MACD is positive, so we have the strength in a long term above 18-week moving average. We see even transportation confirming we're overbought, but it was very short while, so I would say that we are still embedded. We are not above the Bollinger Bands. MACD is positive. We see VIX, as I mentioned, we hit the low side, came actually even under 13. We've shaken that embeddedness. We have moved up. The momentum is still above 50. MACD is positive. We are above 18. So we've been hitting this resistance around 1670. So we'll see if we can hold. As I mentioned, what we want to look at is this VVIX. VVIX is again the volatility of VIX, and what it tells us that a lot of money is going to the calls on the VIX. So that's what I think this Wednesday is important. There's that expiration, so we'll see if there's going to be rolls to the new contracts. But what we see is on the VVIX, we are above that 100-day moving average. This is the 4 days in a row. So we did go outside Bollinger Band, came back inside. Although, again, we shook off the overbought situation that we were in, and MACD is positive. On a weekly basis, also, what we see is now we are oversold. MACD is negative, but we are 1 week above our 20 and 18 and 100-week moving average. As far as the yields, this is something to be concerned with right now. It was a big jump in the yields. We went outside the Bollinger Band, so what we want to see is there's a positive momentum. MACD is about positive. We want this, we want the Bollinger Bands either contract. I mean, they're expanding right now, so we'll see if it will come back inside. One thing is the kind of good news, we are against 100-week resistance, so hopefully we will get rejected and the yields will can come back. But otherwise, we are bouncing up 18 against a 100-week moving average, and MACD is positive, and now we have become embedded. As far as the opposite goes, on the 10-year, now we had a big drop, went outside the Bollinger Band. The only thing is we are oversold, but MACD is negative. When we look at the weekly, the opposite of the yield, we see we are close to that 100-week moving average, and we are oversold, although MACD is negative. When we look at the 30-year bonds, we went to the 100-day and got rejected, and we just broke below 18, and we shook off the overbought situation. On a weekly basis, again, we have been being rejected and against 18 and 100-week moving average, and we are embedded on a weekly on this oversold situation. Dollar has had a nice move. We can see based on the yields, based on the geopolitics, when we see this movement outside, inside Bollinger Band, again, this magic about 100 is important, and we are embedded. MACD is positive. Euro is the opposite. We broke below the 100-day moving average, 18-day moving average been broken. There's a dead cross happening, and we are embedded, and MACD is negative. Gold has had a nice move. We've been continuously above the 18-day moving average. We have just become embedded. MACD is positive. But again, we need some breathing, right? So we're still above 18. Bollinger Band has expanded a little bit. So the geopolitics and the demand, we see that this is continuing moving. And silver, which has been on fire, went outside this Bollinger Band, came back inside, but we are embedded. MACD is positive, but look at this Bollinger Band. It's been pretty expanding. On the weekly basis, we've had the 5 weeks. Remember, we did sell some here, came back inside. We are going back up again. So we see Bollinger Bands on a weekly basis are expanding. Embedded MACD very strong. But look at this width of the Bollinger Band. As far as the copper, it has had a nice move as well. And what has happened now, we are right on this 18-day moving average, and we are shaking the overbought situation, but MACD is about to go negative. So, crucial time to hold that 18-day moving average. On a weekly basis, though, we've been inside, outside this Bollinger Band, and we just went overbought. So we'll see what happens this week if we can keep the momentum going and stay positive, although MACD is positive. As far as Bitcoin, I've been talking about this again. We talked about that 83,000, and then we looked at the 18-day moving average, the 90,000, 93,000. So we've had some strength. We shook off this December winter storm, and now we're hitting that Bollinger Band's been outside, inside. We have a doji on Friday in decision. We are overbought. We need one more day to become embedded. MACD is positive. So crucial times. I think I have talked about that 103,000 would be the next target. If we break it, then we will have money coming in. But that was not enough for me because I want to look at the weekly. And for past 7, 8 weeks, I've been talking about this 100-week moving average, really a magnet, and it's been a resistance. We finally got off the embedded. We are oversold, and we are right above the 100-week moving average, right around, we passed that 95,000 zone. So basically 94,393 is a 100-week moving average. We are against the 18-week moving average around 100,759, but we need another week. So I want to do a little more, again, technical investigation. So you can see why we had the little sell-off after the squeeze. We did have a nice move, but we went to the 2 standard deviation. We want to hold this 21-day moving average. That would be positive. But even beyond that, I want to look at on a monthly basis. We had done since 2019, actually 2018, end of 2018, Fibonacci extension to the low of 2022. And we came very close to that 1618 at 131. We were close at 127. We did go below the 100%, came back, and we are right around that 95,000 again we talked about. So we are right above that 94,000. 93,000 is our crucial point. But even beyond that, let's look at monthly from a retracement point of view from low of 2022 to our recent high. And what we have done, we are having resistance, I mentioned, but this is a 20-month moving average. We are right against it. We need to break through that. But also from Fibonacci point of view, we have just broken above the 38.2. You see how that 50% has played a nice support. So we did bounce of that 80,000 zone. And the idea is we are in a very crucial point. So you see the slope of the moving average is still positive. So on a monthly basis, we're still positive. But we are in a, I think it's the crucial points in the next couple of weeks to see which way we're going to go. As far as the crude oil, well, strength geopolitics outside. Now we went outside 100 and we just broke last couple of days below that 100-day moving average. We were overbought, came down, but MACD still positive, but the momentum looking a little negative. So let's look at the expected move. There wasn't a lot. We hit the all-time high, and then we touched the lower edge of expected move, bounced back. As you could see, there was not much really, pretty flat. And then Nasdaq similar, it hit the lower edge of expected move, bounced off. Again, the inflation numbers came, the PPI and the CPI. They were like good news, bad news in some ways. Russell, on the other hand, look at the strength. We hit all-time high outside expected move. We see the Dow hit the all-time high, and we are right inside expected move. What we did with the bonds and notes, the 20-year, we did go up, hit the upper edge of expected move and came down. Uh, in gold, we did all-time high, went outside and came back right after touched the upper edge and came down inside on Friday. Silver has been on fire way outside its expected move, hit all-time high. And then financials, you can see this big breakdown after the earnings, big bank earnings, and we closed outside this lower edge of expected move. Energy did actually have strong week, went outside, hit the 52 weeks high, came back, and then what we have is right outside the upper edge of expected move. Crude oil, similar, it has a very low expected move, so we are right on the upper edge. And we see that Bitcoin actually closed above its upper edge of expected move. I hope that was helpful. We will move on and go to our trade of the week. Thank you very much.